you said in Standard Chartered you have to pay long-term CG. Why is that?
It's because it's a Indian depository receipt. It's not a equity share.
Not listed here.
The Indian depository receipt is listed in NSE BSE. There's no STT applicable on purchase and sale, and it's like a foreign equity asset.
When you talk of valuation higher lower, you're talking to PE multiple.
Both price to earning as well as price to book. So price to book, full report on that. So probably I can share it with you. GDP, when they broke down the factors, one was that GDP growth did not automatically translate to corporate growth. That was the first inference. Second, to the extent that corporate growth came about because of GDP growth, it got diluted because of equity issuance. So EPS growth was not that high. And third is that
aggregate corporate growth will have to be there, but probably it's more competitive and all. That's why individual companies might not be making money. But if GDP grows, aggregate the corporate growth has to be there.
No, GDP comprises of fits and interest costs to all the thing. So in general, corporate profits will grow when GDP grows. It may not be to the extent of the GDP growth. It lags GDP growth. So that has been seen in the past, because what happens is wages grow faster than overall GDP growth. So the share of
you gave of Jet Airways and Kingfisher was very apt, because if they buy so many planes and the GDP grows and sales grow, the sales will grow. Corporate growth will be there, but the profits might not grow because of the competition.
Correct.
As is happening now.
Correct.
I mean, airline industry in India is growing very rapidly now, but it's still making losses.
Yeah. So that was the second reason. Third reason was EPS growth lags, and fourth, most important, was in anticipation of GDP growth, valuation becomes so overstretched that despite the growth kicking in, the returns to shareholders are not that high. So today, if we are at 22 times earnings with, let's say, 8% GDP growth, and US if it's growing at 2% or whatever, and if it's at 10 times earnings, that valuation gap is very steep to be made up just by a few percentage points of GDP growth. That was the other reason which came out in the analysis.
You mentioned that Suzuki's profit, for example, was 34% from India, and now the Suzuki India is also profitable. I don't know how is that. So if you were to look at it, how would you choose whether to put the money there or to put the money in India?
See, I am not making a stock recommendation today. So all the stocks that we have.
An example of the comparison. How do you compare? You mentioned the so-called foreign companies and the Indian companies, which are also like a part of it.
The comparison I tried to make was, let's say, between Suzuki Motor Corporation and Tata Tea. So where both are global companies. Suzuki gets 34% from India, and Tata Tea may be getting a lower percentage from India. So that was what I was trying to highlight. It was not so much.
Look at this, Suzuki's P is how much in Japan, where it's listed.
It's not exactly cheap even today, despite all this fall. However, Stanchart is distinctly cheaper than the banks listed over here, and IBM, of course, does not get any valuation which is closer to Infosys. Of course, it has a lot of other businesses also in terms of hardware and other things. So there's no strict apples to apples comparison, and that's why I'm saying I'm not making any stock recommendation here that sell Infosys or buy IBM, nothing like that. I'm just saying that don't look only at India and don't just get carried away by all the hype that we are reading in the papers that Indian growth story is so good. You will find opportunities outside our shores on foreign listed equity, as well as if you are buying companies in India, you can't be totally isolated from what is happening globally. So today when we say, oh, India will keep growing in a vacuum, we are decoupled from Europe and US. If that were to happen, what will happen to a company like Tata Tea? Then you should not be buying such companies if you are so confident. Again, in global commodities, it does not matter where your country of operation is. If you are ONGC, your profit will be dependent on price of crude oil, which is dependent on global economic activity. It does not matter whether you are operating in India or you are operating out of US. So there should not be so much of a difference between ExxonMobil and ONGC in terms of valuation. Similarly, if you are Sesa Goa, then you should look at what is happening to the price of iron ore, which is again linked to.
But except for the commodity companies themselves, this factor is working at the moment very favorably for Indian manufacturing companies, because commodity prices are low.
Correct.
Because of the international downturn. So it's very good for Indian companies right now.
That is true. Except for the commodity and global commodities. Domestic commodities not so much. So cement, of course, you can't.
The international prices ultimately affect, except in cement and all, but in like other, iron ore, steel, aluminium,
Sure.
plastics, the global prices influence the Indian prices.
Sure.
You say selected companies abroad in this subdued market, maybe some very good value picks like in the US and all.
That's what you were trying to highlight. I was reading some of the foreign reports. They said that because of British Petroleum being, this BP being in a problem because of all this spill and all, ExxonMobil share was also beaten down, whereas there was no particular reason for them to come off so sharply. This paper company, that I have the name on the tip of my tongue, it's giving something like 4 or 5% dividend. So
Maybe researching some of these opportunities for global companies.
we are broadly looking at them. Especially now that RBI allows us to invest a portion of our funds abroad. And just to come back to this slide in terms of rear view mirror, actually the worst times to invest in any particular segment, be it debt or equity or be it any particular market, has been after years of record profits. So if you bought equity in 92, for 11 years you could not even get your principal back. At Harshad Mehta time, index was somewhere around 4,000 and 2003 index was less than 3,000. In this same period, you had a strong, and so 2003 was one of the best periods to invest because markets just ran away after years of underperformance. 97 to 2003 was the best period for bond investing. In 1996 and all, you would get government securities at 14% interest per annum. And debt funds did phenomenally well in that 7-8 year period. However, if you put money in debt funds in 2003, today you would be a big loser. So what happens is people get carried away after years of record performance. So that is one of the things which is somewhat unsettling me. I am a strong believer in bottom-up stock picking. So when I actually sit on my desk, I ignore all of this and I look at each company on its own merits. But back of the mind, I am trying to be more cautious today than I would be at other times. And a lot of this is anecdotal, but the kind of people who are coming to us for investing, people who are individuals who have no clue of what is happening here, they say, oh, I have not made any money in my home country, I have a pension fund to invest, I am retiring in 5 years, why don't you suggest me some good Indian equity funds, or those are the kind of people who are coming. So there is this saying that you should sell when Japanese housewives are buying. They are among the last people to enter, but today you have all sorts of people getting taken in by the India story.
Can you research into some foreign companies which are maybe very, very underpriced today because maybe doing very well abroad?
See, all of this is work in progress, and I'll take longer to come out with names here because these are not companies that I see every day. However, I'm sure there are some over there because and the reason why I think there would be companies attractive over there is promoters are buying them. If you look at Indian promoters are buying them. If you look at this list, obviously our industrialists are finding more value in developed countries. They are beaten down over there.
Down over there.
So considering everything, are you recommending a partial move to cash?
Line by line, stock by stock.
Because if there is a crash, everything falls.
Not necessary, not necessary. We owned ITC through 2007, 8, 9. We had bought it at 155 when Sensex was somewhere 17,000. That 17 went to 21 and down to 8. So more than 50% correction. ITC went from 155 to 250 in that same period. So ultimately what matters over 3, 4, 5 years is how the company's earnings do and what is the valuation when you enter the stock. That is what matters. Short term anything can happen, sure. We have been selling some of the stocks, but again, as Parag Bhai mentioned, Noida Toll Bridge even today makes sense to buy. What we were expecting,
Which kind of stocks are you selling? Where do you see?
FMCG we have been selling, so the way PNG or way lever has moved, the short term, it's pharma selectively. Each stock would have to be looked at its own merits.
But are we yet in a bubble or bubble is still to come? Or do we necessarily
It's
have
not
to-
a bubble. It's not a bubble in the sense, and even if it's a bubble, you can't call a top because when excesses happen, you can go anywhere.
Vicky, you will come to know when there is a bubble because you will not come for this FOF meeting because you know that you know the best. You know that it's the bubble.
So have you experienced this?
Necessarily then after
No, no,
every
really,
trade
tendency
price
is
has
lower
to
now?
get
Yeah, that people feel not this thing.
It depends on where you are starting off from.
Circle of influence.
like from
Of course, I
2000
see the
index
trend
is
going
gone
up
to
because
20
IPOs are just
plus.
started.
So it may go to
Maybe
25,
recently.
24. Is it
So
necessary
good.
that it
Sorry,
should fall
after a
up?
long time.
I don't know.
Good.
But that's cyclic.
Is it
Always
necessary?
I don't have precise numbers where index will.
Is the cycle necessary?
Well, so far in the history, it has been
Yeah,
always a
yes,
cycle.
it has been.
Thanks a lot.